All right, so what's in my stock market portfolio? I'm really trying to clean it up, trying to keep it simple, easier to manage. So let's start with my margin account. So in my margin account, I've got an equity right now of 4,600 Canadian. And as you can see, the list is much smaller. If you've been watching my videos before, you could see a big difference in the number of positions I have open. I'm trying to reduce it to only SPY options, which is buy put credit spreads. I'm trying to only do put credit spreads on the SPY. But I still have some old covered calls I can't get rid of yet. Dell, I might be able to get rid of Dell come February 21st. If Dell is trading at 52.5, I can close this trade without losing any money. Although I'm very tempted to sell another call option for more income, but I think I just want to clean up my margin account. Box, it's still not ready to be closed because as you can see, it's trading at 15.9 and my cost is 20. American Airlines, my cost is about 31 on this, but it's trading at around 29.2. See, the average price here shows 28.17, but that's because I bought it several times, but I closed, and so QUESTRADE will just give me the average of the several times I bought the stock. But in this particular trade here, my cost was 31.5. And I've got Uber, which is a really bad trade for me. I bought it at 40, went down to 25. I sold a call option at 32, and the stock is now trading at 39.6. So the risk of selling a call option at 32 is by expiration. If the stock is trading above your strike, you have to give away your shares at that strike. So my cost is 40 and I might be forced to give away my shares at 32. So I'm losing $8 per share, and I've got 100 shares. So that's the problem sometimes with selling covered calls. But I'm waiting until March 20th and I'll try to adjust it. I'll have to obviously buy back the call option because I don't want to lose my shares at 32. And I'll try to sell a call option at a higher strike. But I'm definitely going to have to go further out, like maybe out until September, so I could do this transaction for a credit. But the more Uber drops, the better it is for me right now in terms of this call option that I have to buy back. I also have United States Steel, which is just terrible. I don't know what to do with this. So I've got an average price of 18, got 400 shares, and the stock just keeps dropping. The last call option I sold is at a 12 strike, expiring March 20th. So the call option is not dangerous. The problem is that I'm losing so much on the underlying stock itself. $3,800 just wasted like that. So what I'm left with is really what I want to have is just put credit spreads on the SPY. So I've got 3 of them right now. I've got March 11, March 13, and March 16 expiration. So the one on March 11, I collected about 65 cents per contract. I've got 3 of them. And as you can see, it's already showing a profit, a decent profit. I can close it soon for 50% of what I collected. I'm trying to close it for 33 cents or 34 cents. Yeah, 33 cents. So as you can see here, I've got an order to buy back this trade for 33 cents while I collected 65 cents. So 50%. So what I'm going for is 50% of the premium that I collected. Same thing for this March 13 expiration, but this time I collected only 60 cents. And I've got another one here on March 16, but I think I collected only 58 cents on that one. Got a strike of 328. So for me to win on this trade, the SPY needs to trade above 328 come March 16. So right now it's at 337, almost 338. So right now it looks good, but who knows what happens in the next 30 days. This one here's got the same strike of 328, and this one here's got a strike of 323. So this one's even safer. In my TFSA, I had 100 shares of the Qs, a covered call trade, but I got out of it. I will try to get back into it. I'm left with a bunch of covered calls in my TFSA that I really don't like. Afria, CHK, Grubhub, they're all pretty bad except for Halliburton. I'm gonna try to get out of it soon. It was trading at 22.12. My strike is 22.5. So I rolled it over till February 28th, collecting an extra credit of $38. But as soon as it hits 22.5 or 23, I'm just gonna get out of this trade. So Halliburton, I can get out of it soon if it doesn't crash. But I'm pretty much stuck with all the others, Afria, CHK, Grubhub, because they're trading way below my cost. So I can't really sell them below. Can't really get rid of them below my cost, or else I'm going to be losing. I'm going to be confirming a loss on them. So I'm going to be stuck with them. But the idea, what I plan on doing in my TFSA is to do covered calls on the Qs or the SPY, or any stock that presents a really good opportunity like MasterCard, Visa, Facebook. In my TFSA, in my RSP, as you can see, I cleaned it up as well. I got out of my Square trade and my Yeti cover call trade. So Yeti and Square, I got my money back. So now I've got more capital to use. Also looking to do covered call trades on the Qs or the SPY. I don't have enough to do it on. Obviously, I don't have enough capital to do it on the SPY or the Qs. Maybe the Qs, but no, probably not. So I've got about 16,000 US buying power. So I could probably just do it on IWM. Ideally, what I would like is if Facebook drops again below 160, and then I could buy Facebook and then just do cover calls on Facebook. That would be nice. And finally, in my RESP, I only have Bombardier. It's a cover call trade, but I just want to get rid of it when I have the chance. My cost is 2.25. It's trading right now at 1.65, so can't do anything. But I still have some capital, but not enough to do cover call trades on these quality stocks or ETFs. If I look at market caps only above if I look at market caps above 200 only and filter on smallest price, so basically with 5,000 US, I would only be able to do covered calls on anything above $50 or anything below $50. So Wells Fargo, AT&T, Pfizer, Bank of America, Cisco. But that's if I like these companies long term. I mean, AT&T is a big company, but at some point it was trading at 32 for the longest time. So I don't like stocks that just don't move. And their premiums are not so high either because it's a safe stock. Maybe Wells Fargo. I mean, it is in the financial industry, and I believe it's a Warren Buffett stock as well. It's got a low PE ratio. See, let's look at the premiums for February 21st. So the next week's. So you can see Wells Fargo. It's trading. It closed at 48.22. If I look at the 48.50 strike, I'd collect about 26 cents. What does that give me? What kind of return does that give me? 26 divided by 48.22. Actually, that's not so bad. 0.5% times 52 weeks, that's 28% per year. But obviously it's not going to be like that every week. But that's the at the money. See, that's too high because that's at the money. And with commissions, it's going to take out about $6. Let's see what the chart looks like long term. So if I look at 3 months, wow, you see, that's what I don't like. I don't like buying it at price and then it just drops. And now I'm stuck with, let's look at 1 year, 3 years, 5 years. Look at this, 5 years. There's no capital appreciation on this stock. Yeah, forget individual stocks. So yeah, I don't know what to do with my capital right now. Registered accounts, I want to do covered calls. In some cases, it's just not enough capital. But definitely in my margin account, I want to stick to put credit spreads, mostly on the SPY. And sometimes on individual stocks depending on earnings. All right, so this was a quick overview of my portfolio. If you have any questions, leave them in the comment section below. Also, if you have any suggestions, leave them in the comment section below. Like always, if you're gonna open an account with QUESTRADE to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.